We'll be diving into the October Portland Metro updates and seeing what's happening in the market in terms of what buyers are doing, what sellers are doing, and also what interest rates are doing, because that is the big elephant in the room right now. Let's dive right into it. My name is William Singh. I'm a local real estate agent here in Portland, Oregon. If you find any of this content helpful, it'd be great if you could hit that like and subscribe button. Now, with this, we'll dive right into interest rates. We are currently sitting at about 6.94% for the interest rates right now. As you can see, we've seen a huge spike within these past 6 to 8 months, and with this, the Federal Reserve has another 2 meetings left, one in November and one in December. At this point, we have a very high likelihood that there is going to be another 2 rate hikes. We are still seeing inflation at a very high rate, and their goal right now is to get that down to about 2%. With that, you'll see where inflation is right now. So overall, inflation has been going down. We've seen a little bit of a lower trend downwards, but the core inflation, which is all items less food and energy, has been actually going up. The reason why this is a little bit of a different and if not better indicator, so just kind of keep that in mind, that we're still seeing this core inflation go up, and until we really see that inflation start to level off and or go down, the Federal Reserve will continue to keep rates going up and or keep them at a high rate. So with that in mind, we might not see rates really dip down into really low rates until maybe the end of 2024, if not maybe at the start or end of 2025. So keep that in mind. For buyers, this is just something to keep in mind, that you're also wanting to make sure that you're finding a home that's going to work for you, but also know that prices won't be dropping significantly. We're starting to see the months of supply starting to go up at this point. We are currently at 2 months. We jumped up 0.2 from last month. As we enter into these winter months, it'll most likely continue to go up because a lot of buyers are not looking to buy during the middle of the holidays, nor do a lot of sellers want to list during that time frame as well. So it'll be kind of an interesting equilibrium where we'll see where we land. But for the most part, we will most likely see the months of supply increase over the next couple months. Pending sales wise, we are going down. We were around the 3,000 mark in the previous month, and now we're going down to about 2,500 homes sold. As you can see, this is very common where we'll see more of peaks in this March to June period, and then it starts slowly going down. So we'll probably see a very similar seasonality. We didn't see that quite as much in the 2020, 2021 in terms of the speed of a lot of these sales. And then the median days on market. This is consistently going up. When we dive into the local market data, you'll see how that's a little bit higher. This does more of a monthly rolling average, but it's going up to about 22 days, and this is a good indicator to see that the median day or the houses are going to be sitting on the market for a longer period of time. Now, this creates a little bit more uncertainty because some houses will sell a little bit faster and some won't. So buyers who are wanting to wait sometimes have been losing out because another offer has come in and they've been waiting and seeing if it kind of letting that thought of being in that home linger a little too long, and then it might just go pending and they lose that opportunity. So it's kind of been interesting to see that in the market, and instead of having offer deadlines the weekend after, we are starting to see a little bit more unpredictability when a property might get taken off the market. Diving into the median sale price, we are looking mostly at the median, so that way we have a better idea of where most of the transactions are going. Right now we saw a little bit of a dip from 550 last month to 545 this month, and this does have some seasonality with it in the sense that the quality of homes sometimes does go down, so thus has lower price points, but this is also going to be a situation where we're not going to be seeing this large jump as we did in 2021. And this is primarily because of the looming economic recession along with the heightened interest rates. as we move into the spring, we'll probably have a better idea of where that demand is, and depending on whether or not interest rates will start coming back down sometime in 2023, we will see, or enough to bring more of that demand back to then push prices up. But as of right now, we will most likely see prices either flatten out or dip down a little bit, but we're most likely not going to see 20, 30, 40, 50% discounts on properties. At this point, there's still that level of demand, and there's still a limited supply, which is not causing a real estate free-for-all or free fall. We'll be diving into the Portland specific update to kind of give you an idea of where things are at in general in just Portland. Now, we're starting to see the median days on market flatten out. This may increase a little bit more, especially as we're heading into these winter months, and once we hit the holiday season, which really starts middle of November into December, we're going to see a lot more listings sit through those holiday season because of the fact that a lot of people do not want to move or really list during that time frame as well. So we're also seeing a lot of price decreases. About 56% of the Portland market are having price decreases. So this is not saying that the value of the home or that list price is going down 56%. It's saying that of all the units in the area that are listed, 56% of them had a price drop. So saw a very small amount that had a price increase, and then our inventory is really starting to flatten out at this point. It's also interesting to see how the median rent has gone back up, but has stayed fairly high as we move into this next year. The ability for landlords to increase rent, it has gone up to about 14%. So it'll be interesting to see where things land on that. And on top of that, we're also seeing about 26% increase in rent in just the last year. Damn! And as housing becomes more unaffordable to buy, then you see a lot more people shift towards renting. And with the increased demand on rent and the lack of housing right now, we will probably see that rent increase over time as well. We'll dive into Beaverton, and Beaverton's at 44, into Beaverton, and Beaverton's at 44. And this is about the same as last month, but again, we're heading much more towards a buyer's market. And when you start seeing those houses pop up, maybe once we hit that week 2 of that listing being on the market, they're usually a little bit more open to negotiations, or if they're trying to sell it a little bit sooner. We are seeing that the median days on market are flattening out or going down a little bit more. Again, we're at 53 days, which is almost 2 months. We're also seeing price decreases. And as you see this median list price start to dip down, it's because they are then trying to catch up or price a little bit more aggressively, which is probably where we see a little bit of a lower price decrease overall with this. Inventory is still relatively low, but there's definitely a lot more than what we saw this spring, where we had maybe 25 to 50 houses available. And rent's starting to increase, but as we maybe head towards the spring, we'll probably see this market action index increase a little bit and or stay very similar to where it's at right now. Diving into Hillsboro, there's a very similar story here, having the median days on market around 49 days, and we're starting to see those price decreases a little bit higher. See a little bit more demand in here, again, coming back in the spring, but time will tell. And if interest rates continue to rise, then it might push down demand even further and make it a little bit harder for buyers to buy, especially in this little bit higher price range. But just know that this higher price range also correlates with the job market that's in the area, which has Nike and Intel. So this thus feeds a little bit of a higher median list price. Tigard actually has a little bit of a lower score from last month at about 48 right now. It was 52. So we're starting to see the inventory, again, flatten out a little bit more. We'll probably see inventory grow more in the spring, especially once we hit past the new year. And then the median days on market has actually been a lot lower. There's a lot more or a lot less units in Tigard, and with that, we're not seeing quite as much of a median days on market because there's just people want to buy in that area. So kind of keep that in mind. And then Milwaukie has actually been very popular. There have been a lot of bidding wars actually in Milwaukie if it's priced properly, and it's got everything, mainly because it has a little bit of a lower list price, and this is where first-time home buyers have really been pushed to, or it is a much more affordable housing price for them. I've seen that there are pockets or certain houses that will get a lot of activity and some other houses that don't, but this is a great place for a lot of first-time home buyers who have been really priced out of that market to at least get something that has a resemblance of what they're looking for initially as a home buyer. So we're seeing the median days on market again increase in here. As we head more towards the winter months, we'll probably see this increase as well, 54% in terms of price decreases. Diving into Gresham, this is a little bit further out, and the prices have been decreasing over the last couple months for the median list price, and then the days on market have stayed about flat. Like Oswego, much higher median list price. So we're starting to see the median days on market actually decrease a little bit, but the average days on market increase. And this gives a better indication of when you're in those much higher price points, gives you a little bit of a better idea of like, hey, those houses that have maybe in the million mark, a million plus mark, are going to be sitting for a little bit longer. So where sellers are competing a lot more against other sellers in that market. And sometimes the properties are very unique and need a very unique buyer as well. So thus it gives a little bit more time on the market. So buyers, again, very similar notes of what I was touching on last month in terms of interest rates will continue to go up, and how long they stay there is very unknown. Unfortunately, I don't have that crystal ball, but for sure we'll most likely have a hike rate increase in November, and then we'll also have a hike rate in December as well. After that, it's a little unclear, and we'll have to really monitor the inflation during those next months to see whether or not the rate will kind of stay where it's at and or drop over time. And one of the points I always want to make sure that you understand is you're wanting to buy a house that you can afford that monthly payment. There are some potential ability to do a rate buy downs right now. There's a permanent rate buy down you can do where you're having the seller give you some additional credits to buy down the rate permanently. There's also some rates or programs that you can do a 2-1 buy down. So if we're at 7% for the interest rates, then you can buy down your rate down to 5% for that first year, and then for the second year it would bump up to 6%, and then on that third year you would have the full 7%. Now, this is puts you in a somewhat odd position sometimes, because if interest rates continue to go up, then at the end of the 2 years and entering into that third year, you will at least have a lower rate than what interest rates might be. And at the same time, if rates do dip down, then you can refinance as well, so that way you can have that lower rate and a stable monthly payment that's going to be at that lower rate. So keep that in mind, and always plan for the worst case scenario when you are looking at those types of loan programs. But if you're waiting for prices to dip 30 to 50%, you're going to be waiting for a long time. And as those interest rates start coming down, you're going to have a lot more competition enter the market. A lot of people were not wanting to buy because of the competition, and now a lot of people are not able to afford it because they've been priced out. So it'll be a time where in the next couple of years you're going to really want to think of what's going to work best for you and look at that 5 to 10 year time frame. And then sellers, understand where the market is right now. We are most likely going to be seeing a longer days on market, so if you're expecting that house to sell in that weekend, you are going to be very disappointed unless you price it well below the market value. Now, this doesn't mean that the house can't sell whatsoever, but just timing and marketing and choosing a good agent that can walk you through that process and also set realistic expectations. Many times when you go on the market, understand that you might need to do price drops. As we dive into the local market updates, you're going to see that a majority of listings have been dropping their prices, and those who are not able to go down in price, or offer different incentives or 2-1 buy downs options for buyers, you're going to be sitting on the market for a while, and you might not be getting the price that you want and might have to take more drastic measures later down the line. So if you're not looking to sell right now, you can also look at alternatives in terms of renting your place out. If you want to talk about that, feel free to reach out as well. I'm a property manager. I manage my own properties and have a good understanding of what would be needed in order for you to make that work, and then also leveraging your current equity. So because housing prices have been so high, a good time to pull out a HELOC is now, so that way you have extra funds. You don't have to use them at all, but it at least gives you another option for using or having a line of credit that you're not having to pay on monthly or have a loan that you're having to service all the time. So keep that in mind when you're looking at this. Investors, now is a good time to buy if the numbers make sense. We are finding that a lot of sellers are more willing to make concessions and or do price drops in order to sell off properties a little bit sooner rather than later. In many of the situations that I've been in recently, with cash buyers coming in, we've been able to get under list price, and also as long as it makes sense for the numbers and the value add that you might be able to provide, just know that as we come down from this, once those rates start coming down, the competition for more retail buyers is going to start coming in as well. And when that other demand comes in, it will be a little bit harder to compete. But just know that when you're looking at investment properties, or if you're looking to house hack right now, duplexes, triplexes, and quadplexes haven't been the easiest thing to make financial sense. But right now, if you're looking at that long term and maybe doing a single family home where you're able to add an ADU or maybe a pad for a tiny house, those are great opportunities that you can still use using a conventional loan as well. Now, if you have any questions whatsoever about the market, or you want to have a better idea, feel free to reach out to me. I'll have my contact information down below. And thank you so much for watching.